affordable real estate investments.com, a property investment guide to creating real estate income for properties priced under $30,000.
Hello, this is Lisa Phillips and welcome to AffordableRealEstateInvestments.com. It's where I give you an honest and practical guide to real estate investing at a price you can afford. Today's episode is episode 57. It's buy and hold versus flip and why you should do the former and not the latter. Before I get into that though, I got to tell you what's new and what to expect coming up in this video blog and podcast series. It's first of all, please check me out on Twitter. Like I said before, it's me just giving my thoughts about to different media sources and if they're doing what they need to do, and sharing with you economic media news that should impact you, A, if you're thinking about real estate investing, but B, if you want to know about what's coming up in this economy and what trends to really look out for that'll tell you where your money is going to be safe or not. I will give you those type of articles because that's where I perform a lot of my research, and it's things that I find people aren't aware of that I'm like, hello, it's coming. Protect yourself now. And also I do have some premium content coming up as I relate it to you. It's going to be something I can give you since I can't be one-on-one with you. I'm going to give you the same thing but in a form that you can take, and it's being edited right now. So please stay tuned for that. I think you'll really like it, especially as newer investors. And also, there is something new that I want to do, and it is called Lisa P's Wine Time. So this is going to be bi-weekly, every other Saturday. I'm going to spend an hour talking to people in my audience who wants to talk to me. This can be about real estate, jobs, economy, whatever you want. All I ask is that you bring a glass and bottle of wine to the place. And it's just a way for us to talk to each other and get to know each other in the community. And more of a real time, you can see everybody's face manner. So I hope you guys are looking forward to that. And I'm going to use Google Hangouts, and because of that, I'm limited to 10 people. So if you want to partake and be there this weekend, and let me look at the date real quick. December 7th at 6 p.m. If you want to be there for the first wine time, go ahead and go to my Facebook page. It is www.facebook.com/affordablerei. AFFORDABLEREI. It's just the word affordable REI. And like my page and comment where you see the little message. You'll know where to go because I'll put a little announcement. And from those 10, you need Google, Gmail, or whatnot, or some sort of Google device or Google account, which most people have. And that's how we select who will be coming in. So it's limited to 10. The first 10 people who'd like to spend the time. And this is just something extra if you want to talk and bullshit, drink some wine with someone you know. So that's what I'm offering to the community to get to know each other a little bit better. Now, first, why I think you should buy and hold versus flip. And there's a couple reasons. Now, real estate investing is large. There are a lot of successful flippers. It is their lifestyle, and I'm not saying that they've done everything wrong. They've done a lot of things right. But there's very strategic reasons I do buy and hold, and keep these in mind if you want the same goals for yourself. Now, the biggest reasons are the tax benefits. The reason the returns on flipping aren't so big is that 25% of their gains is taxed, you know? So, you know, they might buy something for $30,000, sell it for $60,000, or buy something for $70,000, sell it for $125,000. But, you know, not only do they have to pay back the mortgage they got for the $70,000, and on top of that, the $15,000 to $25,000 to $30,000 or $40,000 they spent on the repairs out of pocket. Then, whatever they make on top of that, they have to take 25%. And that goes to capital gains. So sometimes you see people who, it seems like the numbers are large, 70 to 125, but they actually come out, you know, $15,000 or $10,000. But it's not necessarily a lot because there's so many taxes being taken out of. I do not like paying taxes, and our tax code is made so that if you're investing in business, you get tax deductions. It is made so that more people like us build businesses and make America great. The more of our private money gets out of our private bank accounts and into the community to facilitate jobs and growth, that's how this America keeps going. Not big IBMs or Apples doing things. Because you know where that's at? That's in China and India. Okay, so it's up to us. But you get tax benefits from it. So the main is that you're not paying capital gain tax, which is great. But the other thing is that all the deductions flow through to your paycheck. So if you're working full time and they take easily from a lot of people $15,000 to $25,000 a year in taxes, and that is not, I'm not even joking or exaggerating. You know this. You can get that back with, like, you get so many deductions for fixing and renovating these houses and purchasing these properties. You can get a lot, if not all of that, back from Uncle Sam, and that is great year to year. So it's funny because I try to do a house a year, mostly because the more renovations I do, not only does it build me wealth, I get my money back in taxes because it makes my adjusted gross income go down so low. Every repair I'm making, everything I'm paying out, everything, you know, takes it off. So I'm building wealth as well as getting the tax deductions. And my paycheck hasn't necessarily grown extremely wide, but I get to keep most of my money that other people don't. So that's why it almost seems like that in yourself makes you wealthy. Just you get to keep your own money, let alone the fact that you're starting to generate income on the side. So that's a really major reason. And if you're going to go buy and hold for the next 20 years, that's 20 years of that $15,000 to $25,000 staying in your pocket. I mean, let alone from the fact that you're going to be generating, you know, thousands of dollars a month from the as you get more properties, but the fact that you can keep that $10,000, $15,000, $20,000 in your paycheck, what's that worth over 10 years? $200,000? You know what I mean? I'm not exaggerating. That's the sad part. You know, or two, you know what I mean? So it's really self-fulfilling, and that's something to really keep in mind. That can also make you wealthy, just keeping your paycheck. And the other thing is that it's consistent income replacement. And here's the deal. If you're a fixer, if you're a flipper, as the market goes down, all of a sudden it's harder to get loans. It's harder to get approved. Banks tighten their lending. So a business model that you thought you'd keep doing, all of a sudden you're like, I can't keep flipping. Well, what do I do? So you're dependent on the market. You're depending on banks and loans. But when you're doing buy and hold, you're buying low, of course. Well, once you lock in the rate, you have that rate for 30 years. Now, you can pay it off sooner, which is good because then it puts the money in your pocket. But you can lock in long-term rates, so it doesn't matter what the banks are doing 10 years from now or if the market tanks. You got your 30-year mortgage at a good interest rate, and you're sticking with it. You see what I mean? So all of a sudden, the fluctuations in your own private life, be it your job or financial state, you know, you've already locked in your price and the tenant has been paying for your property all this time. So that's something to remember, consistent income replacement. I'm doing this real estate investing so that I don't have to do my full-time job anymore. I need a consistent stream. Yeah, you have vacancies every now and then, but if you fix the place up nice, you're always going to have tenants for the most part. And if you screen your tenants well, you're not going to have bad tenants. So you can have that solid income streams. And with, you know, minor blips as one house becomes empty, but you have 4 others that aren't. You know, but something you can handle, the fluctuation that you can handle. And here's the third reason some people don't look at. So say you fix and flip for 5 years. And say you have $200,000. Let's say at the same time you purchased 5 properties, renovated them up. Not only did you get income and the house is being paid for each other after 5 years with buy and hold, you also have equity. So you have cash each month, but you have the equity of the 5 homes. So after, you know, maybe you bought them for 30, but then after you bought them, there are 60,000. So you have $300,000 in equity. And whereas a flipper might have 150 to 200, depending on how much taxes he paid on that after all the flips. It's nice to have that cash, but what about having, you know, $5,000 a month in income, and 5 houses worth $300,000 combined, and you can always sell one house and still have, you know, $240,000 in equity, as well as, you know, $4,000 a month in income. So I like the buy and hold strategy because you have so much flexibility. You see, like, just you're flexible. You know, you can sell off 3, you can sell off 2, and still have money, equity, and something you own versus just cash. And then all of a sudden, you know, you can do things with that. You can leverage this house to get a home equity line of credit or a personal loan, or use it as collateral for a small business loan. All of a sudden, those 5 homes mean something. That means you have power in your hand to do what you need to do and leverage as you need to leverage over the same time that that guy sold and bought and sold and bought. So no, I'm not saying what they're doing is wrong. I'm saying there are very strategic reasons to look at buy and hold, where it just, if you want consistent income replacement, it just completely outclasses that, and you're not as pervious to market fluctuations because you're locking in rates for the long term, and the investments pay for themselves, and you still have a flexible, monetized properties that you can do things with that equity. You haven't given it away because you didn't sell it immediately. You're probably earning the same amount that they flip in that first year. You probably earn in that first year, let alone, you know, the 15 years that you hold it, all that income it generated then. So a lot of my properties that I fixed up, you know, I could sell them because I did a good job of fixing them up. But I'm like, if I sell it and I make $30,000 profit, I can make $30,000 in 3 years or 4 years with this investment. Let alone me having it for 12 years, you know, I make 3 times as much, you know, $100,000 off of it for my initial, for what I put in initially. So thank you very much. This community is great, and please go to facebook.com/affordablerei and sign in if you want to do the December 7th wine time with Lisa, and you want to sign into our Google Hangout, and we'll see each other face to face, which I think is going to be a little fun, and bring a little bit of wine. It's just a way to get to know each other, and for you guys to know a little about me. That's not necessarily real estate focused, but it can be. Ask what you want. So thank you so much. I'm excited to get to know all of you guys, and keep signing in. This is Lisa Phelps with AffordableRealEstateInvestments.com. It's where I give you an honest and practical guide to real estate investing at a price you can afford. Thank you.
Everybody get up.